A recent report which was commissioned by the Qatar Financial Authority basically summarized the practice of the last 30 years, which says most transactions that are taken in the Islamic finance seek to achieve the economic outcome which are similar to the economic outcome achieved by conventional finance, except that there are more steps added to it. Buy, sell, and if you cannot buy and sell, you can always add a wa'd, half promise, because that is not aqd, and therefore it would be allowed. And the tax relief was also given because, for example, you have in Malaysia, Income Tax Act of 1967, I think is section 2.7, which says any reference in this act to interest shall apply to gains or profits received and expenses incurred in lieu of interest in transaction conducted in accordance with the principles of the Shari'ah. So the whole tax code said that anytime you see the word interest, the payments under Islamic finance will be treated as such, as deemed interest. UK has passed many legislation where sukuk income and other incomes are really treated. So this pattern really developed. And what happened, we started using what you call fictitious contracts, which will be sometime not even be complied with according to the local law. For example, in Murabaha, many times you will find fatwa which say you don't have to register the property when you buy it. You can sell it without even registering it, because from Sharia point of view, ijab al-qabul was enough. But from legal point of view, it's not enough. And there is nothing haram about registering it. And then if the hakim or the ruler or the khalifa is saying register it, then you should register it, unless there is a ma'siyah in that. But all kind of fatwas were given in order to fit this kind of pattern that anytime you need conventional financing, you can always achieve it through engaging into several contracts. So we now hear a lot of criticism about this. They say Islamic finance is nothing really Islamic, it's just different Arabic names, and it's the same thing, that it is really tricks, tahayul, and it's not only coming out of the courts, but also some of the most prestigious Islamic academies, such as OIC Fiqh Academy. As you all know, tawarruq is the overwhelmingly used instrument, and they say it's tahayul al-riba, the organized, and Majma' al-Fiqh al-Islami li-Rabita, Muslim World League, and other. So just recently, and then we have a lot of seminars which are going on where the subject is really now from Sharia compliant to Sharia based, or from real to fake and all that. Every day there was in LSE, Harvard, just after the Euro money, there was a conference, and in that conference was also the same theme, same thing, how to make it real. In fact, one person asked a question, a young man who works for many, many years in a bank. He said, I have two conflicting emotions in my head. One is I am doing something noble, as I work for an Islamic bank, so I am really working for an Islamic bank, and it is something very noble. On the other hand, he says, my day-to-day activities are reverse engineering conventional finance product. That's what I do. And then at the end, he rhetorically asks, maybe I should go and open a restaurant on the beach or something to really have, and he is not alone. So many young people come to me and say, Sheikh, Wallah, I don't know, we came to this Islamic finance, but it bothers me, it starts bothering me. And as the contracts are becoming more and more complex, and hedging and swaps and interest rate swap, all those things, liquidity management tools which we are using, he said that they all will becoming just like conventional finance with some stacked contracts, fictitious contracts, sham contracts. And I don't know what to do. I'm now so much involved in it. And of course, they have families, they have children, and suddenly they can just pull themselves out from what they are doing. So there is a real dilemma that people are going through. Now, Shamil case was decided long time ago, and then recently TID against Bloom was decided here. In Shamil case also, he said the transaction were in truth disguised loan at interest. This is a very one of the early UK court case. And TID against Bloom, the attorneys for the Islamic financial institution claimed that the contract which was being used by that institution, which was approved by their Shari'ah board and various prominent Shari'ah board, it was in really, it was interest based contract. That it was haram, and therefore it should not be honored because it's an Islamic financial institution and it is against its charter, because the charter says you cannot have any contract which is not Islamic. So, and the judge said that when I look at this whole transaction and read it, I reach to the conclusion that the one finds a device to enable what, at least to some eyes, appear to be the payment of interest under another guise. So we are talking about guise, camouflaging and covering and dressing up, not something very healthy, really. And then there are some other problems that also arise as a result of jurisdiction, because the substance of the contract is something and the form is something else. So you don't know which court really should go. You should go. Should you go to Board of Grievances, which deals with the commercial cases, or you should go to some committee which deals with the banking dispute? What is this dispute all about? And people started running to see which court will give them more advantage. The bank normally will go to Sama committee because they enforce indirectly. They are more lenient in enforcing the interest provisions or things which look like interest provision, whereas the Board of Grievance has scholars who also sit there, and they would not. So if you have a murabaha contract, or whether were you buying commodities and selling commodity, which is commercial activity, or were you doing something else which is really the substance was the finance. So we have a case in Saudi Arabia, and Board of Grievance said no, it belongs to us, and they really said that this contract we will not going to look what it says or what the title is. We are going to decide based on what we read after we read the totality of the contract. And they decided that it was neither this or that, and they decided it was something else. Very confusing if you are really dealing. I mean, the whole point of writing good laws and good contract is that you should be predictable. They should be easily understood and implemented. They should reflect the intention of the parties, because each contract has a DNA of its own, which forces it to function in a certain way or behave in a certain way. Otherwise, we would have just one contract, which just call it bare. But we have leases, we have copyrights, we have this and that. So each contract has its own DNA and purpose, and therefore if you don't write it with the intention and the commercial realities or commercial purpose of the parties, you will be creating a confusion and not solving. So many courts are recharacterizing the contracts. And for example, in Murabaha, we said that it is a profit from sale. The IOFI standard said that you cannot write a early payment discount provision in it. In a lease contract, because you are the owner, Islamic institution is the owner, if the lessee, the one who received the financing and he has been paying for the last 15 years, if in the last 5 years some calamity comes and he defaults in the payment, the banks were claiming that we are the owner of this house. You have nothing in it, so we can just sell it, and you are just a lessee, and we'll keep all the money. So what is happening there? The relief is not coming really from the Sharia scholars who said that don't provide for the Islamic early payment discount, but it's rather coming from the central banks. In Malaysia, for example, in 2010, they said no. Whatever we said in the past, we overrule it. There should be an early payment discount provision in the Murabaha contract, which says if you come and pay early, this is what you will pay. You will not pay the total outstanding debt, which includes the financing charge for the unused period. So if, for example, you bought a $100,000 house with a 30-year or 20-year payments, the total amount which was added as a markup was based on that period. But after 2 years, if you died or if you wanted to move to another country and you want to sell the house, you go to the bank and the bank said that you bought this house for $300,000, you paid $50,000 during this period, now you owe us $250,000, which was a shock, and you would be surprised. There are more than one. Sister Hakima is in ISRA, and she has written a book on this, on cases in Malaysia which involve Islam. And then she said there are about 2,000 cases in Malaysia. Now, contracts are supposed to be written to avoid discord. A good contract is that you really don't ever see it. You implement the whole thing and you never see it. Here you have 1,000 cases coming just out of one provision which is so important. In UAE, central bank has just passed a law which said that it is the right of the borrower, and it's both for Islamic as well as conventional banks, to make an early payment discount. And the bank cannot charge more than 1% of the remaining balance, not the total debt, the remaining balance, provided it's less than 10,000. So if it is 10,000 and 1% is 12,000, you can only charge 10,000 dirham for processing the early payment request, which is totally against what IOFI has written and what sometime, even to this date, some scholars were criticizing this. So the relief is not really coming from scholars when they see injustice, but it's coming from Malaysian courts, from central banks and other places. So what is the way forward? I mean, I complained a lot and said, what are we really, can the solution is that we dress up conventional financing? Is this the long-term solution? Can we really win the heart and mind of foes and friends, those who believe in Islam and those who do not believe in Islam, just by looking at our behavior? I mean, here you have a young man who's saying that, I have a conflict while I'm working. Can we really win the heart and mind of the people that this is a system which can be sustained, is different than the conventional? If we are, all that we are doing is really reverse engineering, as the young man said. And then it creates a lot of conflict with other laws, because if you call a murabaha a sale contract, and if I have bought a house from a bank which was just built, and I sit as an arbitrator also in Dubai, I see these kind of conflicts which come when you try to solve a problem where the substance is something and the form is something else. That you bought a house, imagine this situation, you bought a house under murabaha. The bank purchased the house from the builder and then sold it to you. 2 months later or a year later, the roof is leaking, the walls have cracked, or the foundation is collapsing. Under the local laws, the builder must give you, the buyer must give the buyer 10-year centennial warranty for any major defects. So the person who has bought from the bank goes to the builder and says that, my house has this problem, fix it. And he looks at this database and he doesn't find him. Say, I don't think I sold you this house. You don't exist in our system. He said, but I bought it from such and such Islamic company. He said, well, then you go to them. And so when you go to them, they are acting on, or they are really operating on a LIBOR plus whatever the rate is as a financier. They have no setup to fix every car that is, that they have sold, or pay the parking tickets for every car that they own under the lease agreement. This happened in Kuwait, by the way, that the banks were getting a lot of traffic violation citation because they own 5,000 cars which they have financed. So you have existing laws. We are not living in an empty quarter. There are consumer protection laws and these laws and that laws, and they come into conflict. Why? Because you have labeled your contract differently. So what is the alternative? And as I said, this is not a fatwa. I think the issue is here really, if you look at it, riba is haram. And interest, pure interest, is also haram. There is no doubt about it. Because what you are charging in it is time value of money. And if somebody owes you money and he's supposed to pay you today, you come or he comes to you, say, I cannot pay you this £100 which I owe you, but if you give me a month or if you give me a year, I'll pay you more. هذا عين الربا. This is the essence of riba. This was haram. Now, so riba is haram, but there is something called fixed return with capital guarantee. Okay. Now, fixed return with capital guarantee, is it always haram, or is it permissible under some circumstances? And what I am submitting, and which is not something new, which is accepted by almost all the scholars who sit on Shari'ah boards and others, is that in Islam does permit you to charge more than the cash price in a credit sale. So if I were to sell you this for £100 now, and you say I don't have £100, I say fine, I'll sell this to you for £110 if you pay me in 1 year. This is not allowed in Christianity. They considered it as riba. Judaism considered this as riba. Shari'ah al-Islamiyah has allowed it, with very few Sahaba and Fuqaha who said that don't make this as your business. It is permissible, but don't make it everyday business. Now, if you look at this transaction, it's very close to the interest type of transaction. And that's why Christianity and the Christian church and others have considered that as usury. In fact, even laws of many countries consider a credit sale with markup as interest. So even though interest is allowed, but if the markup is so high, they will charge the seller under the laws of usury, because they consider that also as interest. So in Sharia it is allowed, but what is not allowed is riba. So if I give you 100 cash now, under the condition that you give me 110 later, it's not allowed. But if I sell you something, a house which is worth 100,000, and say that you will pay me in 10 years or after 10 years, then I am allowed to charge you 200,000. Why? And this is, I think, we should have, reflected on this. Why is there a difference between this and that? In Mudaraba, for example, I cannot give you $100,000 now and say that you will give me 5% fixed return and you will give me my money back. Why? Because we don't know how the Mudaraba will turn out at the end of the day. Perhaps there will be much more profit, or perhaps there will be a loss. So on day one, I cannot fix the return to me as a result, and I cannot also ask you to guarantee the payment. However, in the house, yes, I can. Why? The difference between the two is that while in the first one, Mudaraba situation, you are charging for something which is speculative, uncertain. You really don't know what will happen after 1 year, how this Mudaraba will come out. But in the house, you know on day one that you will get to live. You not only become the owner of the house, but you will get to live there for 10 years. And you have not paid for it. I'm just consider that like a balloon payment, one payment, not every month. But you didn't pay for it. So now, should you get that 10-year stay in that house for free? Is that, or if you pay for it, is that zulm? Is it oppression? Is it injustice? So after, and in Salam, it's a pure financing contract where the farmer doesn't have money to buy the seed and pay for the labor and feed his family. So you give him purchase price upfront, but you give him, let's say, 80 or 90 for commodity or for the grain worth 100 that will be given to you later. So you have really taken 10% return on your financing. Is permissible. Why? Because the farmer has benefited from that money from day one, and you have given him all the money now. So fixed return, sometime with capital guarantee, sometime is allowed and sometime is not allowed. Once we have reached, extracted, we call it in the fiqh, usul fiqh, istinbat. Yani, you look at a situation and then you derive a rule from it. Then you will say that the Sharia will prohibit when the charging a fixed return with capital guarantee is a consideration for a speculated benefit. You don't know, like in Mudaraba, the example. But if it is a certain benefit, a measurable benefit, then you can charge and you can fix your return, and you also have a capital guarantee. Now, if we use this, the other thing which is very important is that your markup should not be based on time value of money. It should be based on what is the worth of the benefit that you received. What was the rental value of that house for 10 years or something. Rather than saying, regardless of, for example, in Dubai, the house where I live, 5 years ago, the rent for that house was, let's say, 400,000. Today is 150,000. So if we applied this formula, those who have taken a loan based on time value of money, ijara loan, murabaha loan, musharaka loan, Islamic loan I'm talking about, their payments didn't go down. They are stuck, and if they were servicing their loan by receiving money from their tenants, then they are paying from their pocket. But if the markup was adjusted not based on LIBOR, but on IBOR, Islamic benchmark, which is based on the real benefit that the person is receiving, or the receiver of the finance, because you are really charging him for the benefit, usufruct, which you can sell, time you cannot sell, then he would have been relaxed. And you say, Alhamdulillah, that I really purchased the house through ijara, and I'm not paying the same which I was supposed to pay when the rates were very high. Today, this is not the situation. And then second step is, how do you really apply this rule? See, the important thing is that we did not realize the potential of this, what I'm saying here, referring to here, abbreviating it as a BBA, or deferred payment contract with a markup. We did not really realize its potential. We did not extract the rule, because if we have extracted the rule and we have accepted it transparently, openly, then there would not have been any need for dressing up. You simply see that this contract, or this overall contract, really is producing a benefit to the receiver of the finance, and the benefit is certain, and the benefit is measurable on day one. Then you just lend him money based on that. And the sale contract should be with the builder and the buyer, without really distorting the relationships, so that if there is any problem with the property, he can go directly to the builder. And then tie these contracts together in such a way that the financing and the commercial activity from which the receiver of the financing is driving a usufruct as a benefit is not separated. In tawarruq, it doesn't happen. You go to a bank, you want to have money, and you say, okay, fine, how much? This much. For how long? This much. Okay, we buy something, we sell something, and at the end of the day, or after 2 hours, or whatever, all the papers are signed, the money is in the pocket of the person who came to borrow money, or the borrower, and he owes the lender more than that at the end of the day, and everything else has disappeared. Commodities have disappeared, everything is gone. There is nothing there, and there is no benefit that you can measure. So in this formula which I am proposing for your thinking and deliberation is really that it will it will not require fictitious contracts. It will not require 11 contracts or 10 contracts or 5 contracts. Once we know the principle, we will apply it in a very transparent way. And the whole system or this whole use of fictitious contract, which is causing confusion and conflict, will just disappear. Now, so it will be clarity away from hiyal, harmony between form and substance, harmony between rhetoric and action, advancement of the objectives of the value of the Shari'ah financing and not just form, discarding hiyal and makharij, less step, less cost, less risk, because the more contracts you have, the more risk you have. And easy to adjudicate any time there is dispute. You know who you are dealing with, you know what their objectives are and where they have failed to meet there. So, innamal a'malu bin niyat. Prophet ﷺ said that you will be judged by your intention, and if something is bothering you, there are only two things. Either what we are doing is haram, then dressing up, it will not make it halal, and we will be judged by it. And if what we are doing is really halal, in a way that we are helping people in buying their homes, their cars, their other things, then come up with a basis, Sharia basis on which you can build your whole foundation. Wa akhiru da'wana alhamdulillahi rabbil alameen.